Well, thanks for tuning into the market wrap. I'm Niraj Shah, and it's not turned out to be a pretty Friday. You would have to admit that Indian markets fared a lot worse than what some of the other regional markets have done. Europe was doing reasonably okay compared to what in India was when Indian market shut, and you have to admit that it's not a factor of the rising yields. I mean, the yields went up a little bit in India, but it's not that the Indian yields were or the Indian yields would bother the market so much. I think this was a routine correction which would have happened. We have been at elevated levels, and therefore there is a pullback. The pullback is rather more stark in the bank Nifty, and that continues. So about 1,600 points lost for the bank Nifty in the last 4 trading sessions, and that is what is pulling the markets lower. So let's look at the Nifty first and look at the key movers and shakers in the session today. As you can see, so there was some weakness in some of the stocks which have done really well in the last few days. Actually, if you look at the derivative side of the market, you will see that that's what I'm talking about. But here, look at the Nifty 52. ONGC, good run the last few days, pulls back today 5%. SBI, good run the last few days, pulls back about 4%. The steel stocks came off. Maruti Suzuki got added to the conviction list of Credit Suisse and still lost about 2.5%. So the day was pronounced by losses to stocks which have done well in the recent past. The defensives came to the fore though. You had Hindustan Unilever, Dr. Reddy's, RIL, etc. All of them doing okay. TCS and HCL Tech too doing reasonably okay for themselves. HCL Tech, I reckon, on account of the fact that the CEO mentioned that the Indian IT sector can double. So a bit of a defensive bent to the markets in the session today. But what large cap stocks stood out? Nikki Johnson for that. Nikki, which large cap have you chosen to speak about today?
The one which has lent some sort of support, at least, cap the downside for the markets, if I may so say, that Reliance Industries, that is one counter which has rallied for 7 out of 10 consecutive sessions now. It's gained more than 8%. The heavyweight has gained more than 8% over the last 1 week or so. So clearly some amount of traction building in for this one. A couple of days back, News, there was a report on why JP Morgan is actually constructive on RIL. Although it does see a consolidation phase ahead of the stock price and in a period of the market weakness, it feels that there could be a relative outperformance coming in from Reliance Industries. It says that GeoMart is clearly a data point for this, but how RIL ramps up GeoMart could be the key medium-term driver for the stock price of this. In terms of downside risk, it said that consensus earning cut, of course, that is one bit. And apart from that, it expects Reliance to induct technologies partner into O2C business, which could be the key driver. In terms of the legal challenges, which still continue to persist in Amazon, JP Morgan says that they do not have a timeline when this could particularly play out in totality. So that is net with how RIL has been performing. But you have been tracking this counter, closely to Niraj. Would you want to add a word on it?
Well, good for Reliance to be slightly supportive at the point of time when the other indices or other stocks are slightly weak. You have to admit that Reliance for the longest time has been a bit of a laggard. So it's about time that Reliance did this. But yeah, good going for RIL thus far. Just let's wait and watch if the going continues. But you never know. The pause for the Bank Nifty correction may be around the corner. So it'll be interesting to see. But the point that I think you were trying to make is that if you look at the broader end of the spectrum, I think today's move will also show that the correction was largely in pockets which had run up quite a bit in the last few. So yeah, look at that. PSU banks right up there. And here, maybe I think that the yields played a part. The market will believe that if the yields are moving up and if rates move, then the bond MTM portfolio gets hurt, so on and so forth. Central Bank, Bank of India, Bank of Maharashtra, IOS, Indian Overseas Bank, all of those came under some serious pressure. Essentially, PSUs at large came under pressure because you also saw ONGC, Power Finance, etc. Correct, but that was essentially the losers. But just that at the broader end of the spectrum, you also had some of the other stocks, which cracked. Apollo Hospital 6%, for example. Idea Cellular, Bharat Forge, all of them came up. What did well? Names like IDFC First Bank on the fundraising. The two insurance plays, General Insurance and New India Insurance, continue to rise. So doing well for themselves. Schneider Electric had some gains about 5% higher, and some gains for Sterlite Technologies. I think 3 days out of 5, this one has done well. And arguably, one better week for Sterlite Tech. What individual reasons, Nikki, for some of the broader end of the spectrum names?
Yeah, I'm going to be talking about Godrej properties. If you could just pull up Nifty real estate, it's typically not done so great in today's session, or just one single day wouldn't make a difference for this counter. But if you look at the trend that has been playing out overall over the last 11 trading sessions for Godrej properties, typically, it's rallied for 9 out of 11 sessions. It's rallied more than 15%. But at this point of time, the analyst consensus is 18.6% below the current market price. So, it's clearly defying the target price. And today in the morning, there was a note from Jeffries on the whole housing, affordable housing segment altogether, where it said that it's probably the best in the last 20 years, given the huge pent up demand. The missing link was buyer sentiment, which to an extent is now turning positive. Unsold inventory is also trending down. Housing revival can drive up the GDP growth. Overall, Jeffrey said that the top picks that they have for the sector is GPL, Soba, HDFC, Kajaria, of course, and on the cement side, they had something like a mix of ACC and a construction and capital giant L&T. But overall, if you look at the trend which has been playing out for Godrej properties, that's pretty encouraging. Apart from that, also I'll be speaking about Oil India, which has hit the 52-week high after the company in stock exchange filing declared that it's planning to bid for BPCL Numligra's stake, which at this point of time BPCL holds 61% stake, and Oil India holds 26% stake in this refinery, which is probably the largest customer of companies crude produced from its northeastern fields. So that's a strategic development or a strategic move, and the acquisition is expected to improve the synergies. Because of which you're seeing that outperformance coming in from Oil India. IDFC First Bank, as you just mentioned, the bank continues to raise around, it plans to raise around $413 million to boost lending, and may do so via a private placement or through a QIP. In the past, it already has raised to an extent of 20 billion rupees, at least in June. So it needs to be seen how this entire fundraising plan to boost the lending activity will shape up going forward. But anything specific that you're going to be, that you're eyeing, Niraj, at this point of time?
No, I think banks would be it. Would want to hear what you have in mind, but yeah, banks would be the key focal point for next week as well, considering that the bank Nifty, as I said, has corrected over 16 points in 4 trading sessions, and could there be some semblance of sanity next week? Of course, what the US markets do today and what the Asian markets do Monday would be important. So that's from the market's perspective, really, I think everybody will be keeping a keen eye out for that. And of course, Janet Yellen having sounded the stimulus bugle would be that number would be something that everybody will be watching out for from a global markets perspective. Anything on the local markets, Nikki, and then of course a word on what the world is doing right now.
Yeah, the last time I checked US stock futures, they were trading negative, indicating of a negative start coming in for Wall Street. And if we could just pull up WEI to see how the European markets are doing right now, pretty much negative sentiment across the globe. Not typically, a flat picture with a negative bias, I'd say. No positive cues at this point of time. So looks like we are looking for yet another negative session of trade coming in, or trade coming in from the global setup as a whole. But it remains to be seen how the market performs going forward, and also typically how banking stocks fare out going forward, given the sharp dip that we're seeing in yields right now. But with this, it's a wrap. Thank you so much for tuning in.